Hello, good morning. It's a rather grotty old Tuesday the 19th, but I'm FX Pleas, and this is the market brief. So old Sunak is due to present his autumn budget to Parliament next week, and he's rather conflicted. On one hand, he wants to begin balancing the books, but on the other hand, he's facing continued calls for spending from colleagues who feel the urge to splurge shouldn't stop just yet. Things have changed rather a lot since his blank cheque approach to kickstarting the recovery though, and he's now trying to rein in spending, but he also wants to keep his party members on side despite their continuing calls to splash the cash. So he's trying to take a more inclusive approach, and every department has been tasked with making savings and finding efficiencies worth 5% of their individual budgets. Every little helps after all. Monetary policy is also beginning a metamorphosis at the Bank of England. Andrew Bailey has finally admitted that while he still believes inflation remains transitory, some contributors like supply side difficulties and rising energy prices risk elements of inflation becoming more structural. However, he also maintains that raising rates would be counterproductive to solve the current issues. The market didn't get that memo though, and sterling is powering higher as interest rate markets have priced in an 89% chance of a rate hike. It's quite extraordinary. That's suggesting a rate hike would crack on without tapering QE first. I can't see that happening myself, but I have been wrong before. Meanwhile, we open around 137.75 against the dollar this morning. Over in the US, some prominent economists are concerned about the pace of the US recovery. Fed forecasts suggest supply chain difficulties would disappear. Sorry, the forecasts that did suggest that have not come true. And non-farm payrolls have confirmed job creation has fallen off a cliff in the past 2 months. Supply chain difficulties were underlined yesterday with industrial production data. Forecast was for a 0.1% rise, but the inability of manufacturers to source raw materials and skilled labour contributed to a fall in output of 0.7%. That was following a revised 0.4% fall in August. So given the recent economic performance, will the Fed step up and start tapering support? Again, I'm not so sure. We could see another postponement. Behind the scenes, Powell's chance of another term has taken a bit of a knock. He's been dragged deeper into the Fed ethics issues. News leaked that he sold anything between $1 and $5 million worth of stock in a fund that is directly affected by Fed policy. Technically, he's done nothing wrong with the rules in his role, but morally this may erode any lingering support and make him a one-term chairman. We'll see. The Eurozone trade surplus in August shrank to just 4.8 billion euros. That's down from over 20 billion in July, as the supply chain challenges have spread from domestic issues into the global economy, and they are affecting the wider recovery. The inflationary effect of the shortages of energy and raw materials cannot be overestimated, and it may force Lagarde to adjust her transitory rhetoric. For now, though, the ECB is comfortable keeping policy and support at the same level, and euro-dollar opened this morning around 116.50 as I ran out of track. Join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.